Okay, now we're going to sort of wind toward the end of the presentation. Now we're going to talk about the regional sector of South East Queensland. It seems though you can't talk about Brisbane these days without talking about the Gold Coast and the Sunshine Coast. The three urban areas are increasingly connected economically. Transport-wise, there's almost 3 million people now together in those three urban areas. So we're lucky to have Rem Rafter, our Managing Director from the Sunshine Coast, here this morning. So please join me in welcoming Rem to the stage. Welcome, Rem. Okay, Rem. So, look, it can't always be, out on the waves in Sunshine Coast and the Gold Coast. Surely the global financial crisis has impacted the coastal areas as well. How are you seeing it out there at the moment?
Yeah, thanks, Kevin. Well, this is what a lot of people think of the Sunshine Coast. I think it's true to say that our property markets have been in hibernation. Sales activity fell away quite dramatically from about November last year. Major commercial property developers have put a lot of projects on hold, and those developments which have been under construction in general terms have struggled to find tenants. Been a lot of property put on the market in the last 12 or 18 months, not a lot of buyers, the exception being good quality properties where the yield's been too good to pass up.
Mm-hmm. So what sort of yields are you talking about there? I mean, we've talked about yield levels in Brisbane. Have yields blown out further in the coastal areas, or are they roughly consistent? Yeah,
the property investment markets on the coast have been subdued. Yields have softened right across the board. Office buildings, prime yields are now 7.5% to 8%. In the retail sector, across all sectors there in the retail area, yields have probably softened by up to 150 basis points. And industrial, yields are probably now in the range of 8% to 9%, which is a little bit better than Brisbane. Those softening yields, there's been opportunities there for astute investors to buy good quality properties at attractive yields. An example recently was a large property right in the middle of Nambour. A consortium from Victoria purchased that property on a 10.6% yield, which is well below replacement cost.
Okay. Let's move through the sectors now. What about the office market? We've obviously seen vacancies blow out in Brisbane. What's been the story in the Gold Coast and Sunshine Coast?
Yeah, the Sunshine Coast, the vacancy has probably risen from a little under 7% to almost 11%, resulting in falling rents and increasing incentives. On the Gold Coast, the vacancy factor is a high 20%, its worst performance in 14 years. There's a fair bit in the development pipeline beyond 2009, but I suspect a lot of those projects will now be deferred. In relation to the A-grade office accommodation on the Sunshine Coast, I'm quietly confident that in the nenext growth phase, all the existing accommodation will be well utilised.
Okay, what about retail now? I mean, the Sunshine and Gold Coast has a sort of a sub-asset class all of its own in retail showrooms that sort of stretch along the major roads of the two areas. There's seen a lot of development in that subclass too recently. Are the Sunshine and Gold Coast overshot?
Kevin, the prospects for retail and residential, for that matter, on the Sunshine Coast are underpinned by very strong population growth. On the Sunshine Coast, we're well above the state and national average. Our population growth is currently at around 2.1%, indicating that we'll have a population of somewhere around about 500,000 people by 2030. On the Gold Coast, the situation is much the same. Their population growth is well above state and national trends, and their population should reach about 850,000 people. By 2030, this is the primary reason why developers continually roll out new plans for further projects. I think the coast retail will defy this downturn, as many wealthy retirees, ambitious young business people and tradespeople gravitate to these regions for the lifestyle and the employment they offer.
Okay, what about industrial? We've seen obviously a pretty rapid slowdown in construction activity, and a lot of projects go back into the mooted or on hold sector in Brisbane. Is it a similar story in the coast? Yeah,
the industrial market is very subdued. Land values on the Sunshine Coast have come off their peak of 2007. Rents have fallen by 10 to 15%. There is some evidence now that buyers are now testing the market to see what deals are on offer, particularly given incentives have now emerged in a market which previously didn't offer them. On the Gold Coast, the situation is much the same. Rents have fallen, sales volumes are down. There's a very significant development pipeline on the Gold Coast, around about 75,000 square metres, but most of that's at Yatala, and I suspect many of those projects are yet to commence, and in all likelihood they'll now be deferred.
Okay. What about the investment markets? It's got to be the private investor sort of playground on the coast. You're seeing any interest from institutions at all?
No, all the sales that we and others have negotiated have been to private investors. I see that trend continuing. There has been a significant uplift in inquiry over the past 6 to 12 months, but in the current market it all comes down to whether vendors are prepared to accept prices offered by buyers.
So when it paints a pretty difficult picture on the coastal areas. When do you see sort of the confidence returning and the activity starting to pick up again in coastal markets?
Yeah, I think the problems on the Gold Coast are certainly a lot more visual, particularly given when major developers incur too much debt and hit troubled times. There's been a number of major financial collapses on the Gold Coast, and I think the ripple effects will be felt for some time. The market on the Sunshine Coast is more stable. There's been a lot less mortgage in possession sales on the Gold Coast, and for this reason I think the Sunshine Coast market will probably pick up first, although both markets will be very volatile for some time to come. I think my best guess is that calendar year 2010 will be a recovery year. 2011 I think we could see some really good growth in the market. As always, there's a lot of cashed-up buyers out there waiting for the right opportunity at the right price. They don't appear to be in any hurry.
Don't appear to be in any hurry. It's probably not a bad point at which to summarise the state of the outlook for the coastal areas. So please please join me in thanking Rem Rafter this morning.
Thanks, Kevin.
Thanks, Rem.